Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, we're joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it actually looks like it's been a very good week for the portfolio, which of course we will reveal at the end of the show. But let's start off with one of the recent trades that you've had on, and that's Anglo American Platinum. In fact, that's that trade has been running for a few weeks now.
Yes, it has, and it's actually working out quite well for us. If we have a look at the chart of it that is up on the screen at the moment, what I'd identified was that we had a stock that was in a rising trend. This has definitely been by far and away the strongest of the platinum stocks recently. We saw it consolidating into a triangle pattern through February and into March, and then we saw that basically breaking out through the top of that triangle pattern. I went along and I bought for our portfolio, I bought 370 CFDs at 450 Rand and 46 cents, and I used a stop loss there of 435 Rand.
Yeah.
Now, typically what you do is you take the height of that triangle at its broadest point and you project that distance up from where the breakout occurred. And that gives us a target of around about 515 Rand per share. So that's what I'm looking for. It is still working out pretty well for us. We've been trading up north of 480 Rand at the moment. So I'm happy. I'm going to stick with this trade for the time being and let it play out, hopefully to the target.
Okay, so you're running it and it's all working out beautifully. What about Kumba Iron Ore? That also certainly last week was looking good. Has it carried on? Imagine it's given what it's been doing over the last couple of days, that too is panning out quite nicely.
It is working out quite well. Yeah, the chart of it here is up on the screen. What really got me interested in this trade was that we had this big volume spike through March. And typically a volume spike like that indicates two things. You've got very often quite aggressive selling, perhaps capitulation selling, forced selling sometimes. And then on the other hand, you've got aggressive buying pressure on the other hand as well. And you see this major transition in ownership of shares. And what's often left behind once you've had a volume spike like that is that the sellers tend to dry up or step off the gas a little bit, and then you find that there's a bit of a rebound in the share price as buyers have to then pay up to own the stock. So very often after a volume spike like this, you will see a fairly quick snapback rally, and that was the main reason for me playing this stock in this way. I'm looking here for a rally to 385 Rand, maybe a little bit more, possibly towards 400 Rand. We'll see. But we did this trade for the portfolio last week. I bought 220 CFDs for us at 360 Rand and 87 cents. Stop loss is 348 Rand, which is basically below the lowest point of that recent sell-off. And it's working out quite well. So, we're getting close to the target price today, actually, at 385. So I'll probably look to bank profits here fairly soon. I think given that this is a relatively weak stock, and all I was particularly looking to do here was to play the oversold bounce following that volume spike.
Yeah.
I'm not going to be keen to hang around for too long here. I'd rather bank my profits quite quickly in this one.
Because I imagine you might be tempted by that gap, because what if the stock sort of looks as if it might close that gap? Would you, that might kind of keep you back or in the share?
It's a possibility. That gap was actually caused by the share going ex-dividend about a month back. So I think it might take some doing for that gap to close anytime soon, but certainly it's worth keeping an eye on anyway.
Yeah. Okay. So, two stocks that are performing swimmingly for the portfolio. Now, the third stock is one that had us talking all of last week, basically, and that was Pinnacle.
Yeah.
And of course, we know what happened. The shares plunged 48% over a 2-day period. But obviously, the opportunistic buyers have been circling like sharks around this one, and they include you guys.
They certainly do, yeah. Yeah, I mean, I think if you've been living in a cave and you haven't heard about what happened here, very briefly, last week, Tuesday, there was an announcement that came out from the company to indicate that one of their directors had been arrested on alleged attempted bribery charges for 5 million Rand bribe that he allegedly tried to pay to a police official for a contract that the company was trying to get. And this happened some time ago, but anyway, only now there's this news surfaced. And we saw the share getting hit very, very hard. As you say, it dropped almost half in 2 days. And I think was exacerbated by the fact that there's a lot of derivatives interest in this stock. When I say that, I mean there are a lot of people that hold it via CFDs or single stock futures and are heavily leveraged in their holdings. And when you see a share falling as dramatically as it did here, that sparks a lot of margin call selling and forced selling effectively. And I think that that really served to exacerbate the move that we saw here. So you saw it down 25% on the first day when the news was announced. It was then down a further 25% odd on the following day after that. And then on the third day it began to stabilize. What was very interesting here is take a look at this volume spike that we saw in this share. We saw approximately 30 million shares trade over a 3-day period here. That is almost 20% of the total issued share capital of the company that changed hands in an extremely short space of time. And again, I talked to the concept of a volume spike here, same as we discussed on Kumba, but here it's much more rapid and far more prevalent actually, where you've got unusually large volume trading in the stock in a very, very short space of time. And the principle is the same. You've got a situation where you have these very, very aggressive sellers, forced sellers in many cases here because they were holding leveraged derivatives positions, forced sellers. And then on the other hand, you've got buyers who see this as an opportunity, who like me, looked at it and said, come on, you know, yes, this is not great news, but you know, does it make the company worth half what it was 2 days ago? Of course not. And it was a massive overreaction. And what often happens with these significant overreactions like we've seen here is they take 3 days to be filtered into the market, and they are often also accompanied by a volume spike. And if you wait those 3 days, usually buying on the third or the fourth day is the safest day to buy for an oversold bounce. And by then, you've had all the aggressive sellers being forced out of the stock, having capitulated already, and then you end up with a whole new vast pool of new shareholders who've bought the stock at a discount or at a bargain, let's say, and they are far less likely to panic sell anytime soon, and you're likely to then very often see a quick rebound in the share price, and that's what we've seen here.
Garth, and it's interesting that you talk about the third day, because after the first day, when everyone had watched in amazement as the share had plunged, you know, there was lots of talk out there on whether we would see a big bounce on the second day. And then you start talking about catching falling knives, and unfortunately that's exactly what happened. So I guess people who waded in on the second day got caught out because obviously they weren't expecting it to drop as much as it did then.
Well, that's right. I think in my experience, whenever you get shock news like this, keep this in the back of your mind. It takes 3 days for that news to get fully digested by the market. You know, on day one, you get all the guys that saw the announcement quickly acted and sold. Day two, well, that was some of the slightly slower people taking their time to react. But also what happened was that you would have had a whole bunch of margin calls from the first day that then resulted in forced selling on the second day. So you have a continuation of that selling pressure. And then invariably on the third day, you'll find some residual selling as well, but often that is the day when stability sets in. And if we have a look at the next chart here, now this is an intraday chart of Pinnacle. It's an hourly chart. So what this means is that it makes 1 bar for every hour of trade that the share has encountered. And there you can see Monday, Tuesday, Wednesday. So last week, Tuesday, was when this news announced. The share had been trading at 20 Rand before that, and then it suddenly dropped down to around about 15 Rand on the day. Then Wednesday was the second day, and you can see it dropped further on the Wednesday. Then on the Thursday, there was a lot of opportunity to buy the stock on the Thursday morning, but that was when stability started to come in. And I watched that very, very carefully. And that was when I decided to buy. So basically, we've got day 1, day 2, day 3 is when you want to really take action. A 3-day rule. And what I did was I went along once I could see that the stability was starting to set in, and I could see that the sellers looked as if they had been exhausted, and knowing as well that we had this massive amount of volume that had changed hands. I went along and I bought a 12 Rand 15 average, because I did phase myself in gradually throughout the morning. And then I put a stop loss here at 10 Rand 80, which was really below the lowest point of that recent sell-off. It's a very wide stop loss, but the thing is, when you have a situation like this, it's an extremely fluid situation. Lots and lots of liquidity, lots and lots of volatility. So you need to be a bit cautious about where you put that stop loss. You don't want to put it too tight such that it gets clipped unnecessarily. And also the thing about this is that invariably when you do get a rebound, it's quite aggressive. So you'll find that you can actually afford to have a slightly looser stop loss by virtue of the fact that the bounce that you're going to get is going to be substantial, and it has been quite substantial.
Yeah. So okay, so that was the average price that you paid. So if you take us through the trade in greater detail, and how much of the portfolio did you actually put in this one?
Yeah, all right, well, let's have a look at the details. So I bought a 12 Rand and 15 cents. My stop loss is 10 Rand 80, as I mentioned. That means that my risk per share is 1 Rand 35. I risked 1.5% of our total trading capital on this trade. So we had about 290,000 Rand in the account at that time. 1.5% of that is 4,350 Rand. I then divide that 4,350 Rand, I divide it by the risk per share, and it meant that I could buy 3,222 shares. So I rounded that down to 3,200 CFDs. My target, I'm looking at 15 Rand as a target here. I think there's a possibility that it maybe even goes a bit firmer, up to 16 Rand a share. I think that's probably really where fair value is for this stock now. It's getting close to 15 today, I noticed. And that means that my risk to reward ratio here would be 1 to 2.1 or so.
Okay, so it's not bad, a risk to reward ratio. And
not bad.
And the fact that you took 1.5% of the portfolio, is that also because you've got the Kumba trade and the Anglo-American trade open, and of course the puts spread option, which is still there lurking in the background?
Yeah, look, I did need to also manage our overall portfolio risk. We do have effectively 3 long positions open at the moment, and then we've got that put structure, which is a bearish structure, which protects us in the event of a market pullback. But yeah, I mean, I think 1.5% was the choice I made there was just, I think it was a bit of gut feel, and also the fact that we do have a few other long positions open at the moment as well.
God, so in something like this, from your experience of it, is this more of a short-term trading opportunity then? Because maybe long-term the business is impaired, people worry, now the real investigation begins into what's going on. All the people who have contracts with Pinnacle probably think, well, should we renew with them, shouldn't we? So are the gains kind of limited after an event such as this that you've seen, for example, in similar companies in the past where they've had a shock and then had a similar price action?
Yeah, it is. Look, I wouldn't expect this share to go back to the 20 Rand level that it was trading at before this news broke. I think that you've got to now factor in some sort of a discount for the fact that there's this uncertainty, and it obviously throws a hell of a big question mark over the whole business. And I think you're going to find that institutional money will be a little bit afraid to go near this stock in a big way again, for the time being anyway. So, to me, really this is a short-term trade. We're purely looking for the fact that this was a big overreaction and it's going to bounce. But I think that if you take a 20% discount from where the shares were trading before this news happened, it was trading at 20 Rand before, so a 20% discount from that gives you 16 Rand.
Yeah.
I think 16 Rand is probably the right number for this share to be trading at. So I'm going to be looking to bank profits 15 to 16 Rand. I'm definitely not a long-term holder of this stock at all, no.
Okay, all right. So what does the portfolio look like? We introduced the cliffhanger nature of where you're at, and it's pretty good. Yes,
it's looking very good actually. So we've got our Anglo Platinum trade, which is profitable for us. Our Kumba trade is making us a nice profit. And now this Pinnacle trade is up 6,800 Rand as well. And in fact, when I prepared these slides, the market was a bit lower than where it is now. So we'd actually be better off right now than what this picture is painting. But it's good nonetheless, 297,000 Rand. So we're up almost 19% for the year to date.
Yeah.
So it's a performance I'm very happy with, given that we're 1 quarter down only.
Yeah, I'll say. Let's hope we can repeat this every quarter. Of course, that would be almost entirely unrealistic to expect. And it's nice to see Pinnacle. You always like trades that work, the minute you entered them. And it almost seems like that has been the case with Kumba, Pinnacle, and in fact with Anglo-American.
That's right. Yeah, all of them have worked pretty much off the bat.
Yeah, so doing well. Garth, and then your upcoming courses this week, in fact.
Well, yeah, I've got 2 face-to-face sessions. So these are interactive 2-hour sessions. I'm doing one in Cape Town on the 2nd of April and one in Durban on the 3rd of April. If you'd like to email me, garth@traderscorner.co.za, get in touch with me and I'll send you the details for these face-to-face sessions.
Okay, great. We'll leave it there. Also, something for our viewers to note, next week will be a recorded session because Garth is going to be away, but we'll leave it there for the moment. Garth, thanks as always for joining us.
Thanks.
That is Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.